I only want to put a question to you and give the floor now to the members. What do you think about the program of the Juncker Commission? And then I give the floor to the members if they want to put questions.
So the first question is to me?
Yeah, questions. You can answer if you want. No?
Let's take questions first.
Yeah. Well, I did put a question, but Newton Dunn, please.
Thank you. Professor, extremely interesting, and we all want to know what's happening in Greece, so this was very valuable. Thank you. Two questions. Are the Greeks starting to collect taxes? Because that's essential. Maybe you said it, but maybe I didn't hear it. I apologize. And privatization. I understood that too many assets were owned by the state, and the recommendation they still are they making progress with that? And I suppose the third one is rooting out corruption. How will they do that? Because this is a profound problem all over the world, but I agree it's necessary. But thank you very much for a fascinating presentation.
Yes, Franco Malerva, former Italian Member of Parliament. As a matter of fact, I've worked recently with the OECD, and I remember one discussion once about the monetary union, and an expert claiming that whenever you build together a monetary union in a diverse context, like, for example, Italy when it was united in the Risorgimento, you eventually end up transferring richness from the less competitive areas, the south of Italy, for example, and to the north of Italy. I wonder if in the economic theories that go around this concept is being taken into account. The other question that I had in mind relates to deflation and confidence. I don't know, maybe they're not really related, but it seems to me that what is definitely not at the right level in Italy is the confidence. People don't dare invest. Our Prime Minister every day sends messages about being more confident in the future, but I'm afraid it's not terribly successful. And the deflation risk is really around the corner. So I wonder what you can comment on that. Thank you very much.
Lerva, now I take more questions and you can answer to Brigitte Langenhagen.
Thank you very much indeed for that very thorough statement, which covers all sorts of things. A couple of questions. One on, well, is it right to say that, is Schäuble been right? The Federal Republic seems to have agreed. Could you go into greater depth? Why do you say Schäuble should forget about what he's been saying so far? I really would like to have some greater analysis of that. Youth unemployment seems to be structural, permanent. That's a challenge. Perhaps you should look at financial policy models in various ones to try and increase confidence. But how can you make confidence suddenly occur, and how will that make that have an effect on the economy? Now, France, that's much more dangerous than Greece. Could you perhaps say something on that last point too?
Wir sind in Frieden, Frau Langenhagen.
Well, we live in peace, says the chair. There's no country in danger, as you seem to imply.
Please.
Hi, James Bartholomew from the Secretariat General, current member of the Secretariat General. Thank you for your presentation. This is perhaps the wrong thing to ask an economist, but regarding the longer-term political situation in Greece, you seem to be saying that Greece is pulling back from the cliff edge a bit, at least in terms of returning to growth and coming to a stage where it could maybe balance its books. But what about the fact that an increasing number of Greek citizens, particularly young Greek citizens, seem to have fallen out of love with the European project completely, and that the prospect of an ever closer union, an economic union for them, is more of a spectre of further austerity and further constraints rather than any sort of hope for the future? What sort of longer term economic problems do you foresee coming out of those factors? Thank you.
Thank you. Yeah. No, please. Yeah.
You know, being Greek, probably George Zavos, my name, former MEP. Being Greek, probably I'm the last one to comment, you know, on the country's economic situation, but probably would like to ask the professor what lessons we can get out from the Greek crisis for Europe and the Eurozone, and more specifically two questions. The Greek crisis is and was a sovereign crisis, but the Eurozone crisis is a deeply financial crisis caused by the banking system. In other terms, it was a different story in Greece and a different story what happened in Ireland and in Spain. Probably one lesson we could draw is that the Eurozone was heading the crisis without having a banking union, a crisis management mechanism. And the second probably lesson as a question, is it possible that whenever a small state, a tiny state in terms of GDP like Greece, goes for elections and gets into a crisis, that the whole Eurozone gets into a problem like is today, like you see the FT today having the front page that the Greek crisis affects the international stock exchange and markets and so on? What should we get as a lesson? Should we once move to a kind of Euro bonds, as yesterday Mario Monti, you know, hinted, but we hesitant, you know, to move towards? Probably I'd like to hear more. What are the lessons we can learn from the crisis for Europe? Because there's no way 6 years after the crisis we're still going into circles around. Thank you.
Charistopoli. Yeah. Simorland, please.
Thank you, Mr. Chairman. My question actually really follows the last one because, I mean, the real question to me is that I do remember in the early 1990s, in all the discussions, we didn't believe that Greece would be one of the first, in the first group of those joining the euro. We now know that the criteria for entry, they actually in reality didn't meet. And therefore, I can't help but say, particularly when you were talking about the need for exports, whether they do have to face up to the question of being of continuing with the euro.
Thank you. Professor, you have the floor. Yeah.
It's okay. Okay. Thank you very much for the intriguing questions, which I try to answer all in the remaining 10 minutes. Or do we want to have a second round of questions?
No, there are no more questions.
Okay. Let's start with the first intervention on the collection of taxes. There's a huge degree of problem still. This is so-called installment scheme the IMF and the Troika in general have installed right now. There's a huge backlog in taxes and social expenditures, and hence the IMF, especially the IMF, enforces a more stricter installment scheme. This was a heavy part of the fifth review right now, and they're working on it because, as I noticed, the IMF is very keen on avoiding any losses from haircuts. Otherwise, they would step out. And the IMF, on the one hand, is very important for Schäuble as well because the IMF has huge experience in the kind of extraordinary support and also for keeping an eye on the conditions. But on the other hand, Germany, for instance, is not interested in any haircut. The German politicians are always arguing that debt in Greece is still sustainable, although one has to be cautious, because as we have seen in the debt structure, the EU will be hit by a haircut and not the IMF, not the ECB, and also not the Greek banks. Collection of taxes is a problem. There is also a problem with FDI. This is clear. Only a little bit more than half of the promises are fulfilled now in terms of privatization. And this would be not only important with respect to enhancement of productivity, but also because privatization would induce an inflow of FDI, contributes to confidence and trust to investors. The third question was how to look at corruption. This is really a problem because, especially with an eye on the EU social model, which is the topic here, there was so much effort put into the fifth review, especially concerning the social impacts. And if you talk to members of the Greece mission, there are some former colleagues of mine, a doctoral student of mine is also along with them, that tell us how difficult it is to deal with oligarchs and so on, which bring in some kind of unevenness, which leads to much more resistance than necessary within the ordinary population, which is taxed, which is negatively impacted by cuts in pensions and so on. This is still a problem, and hence is a priority, as I tried to argue in my brief presentation. If you look at the recent Transparency International report, what you find there is that Greece improved a little bit, but still with Italy, Romania, Bulgaria is still seen as the most corrupt among EU countries. At least this is what the Transparency International says. I looked it up in that respect. So this is in short my reaction to that. So they are not able to deal really with this kind of corruption, and this makes social acceptance more difficult right now, and the Troika is very, there's much anger about this, that this was not quite successful. Of course, you can check for this. There are economic models to look at it. Also the black economy and so on. You could compare local GDP with local electricity consumption, for instance. You can, of course, this is the famous example Papandreou always mentions. We had him in Germany twice at the German Economic Association annual meeting. We invited him and he came, and he described how planes also can look at swimming pools and so on in the gardens. These are physical methods maybe to deal with this, but things are more complicated in terms of money shifting. The next question was on monetary union. As I understand, that there was the problem of EMU mentioned, containing countries with different competitiveness, and whether we haven't observed this already before. Of course, we have observed it before, the Mezzogiorno problem in Italy, and nevertheless, Italy had the oldest sovereign currency in the euro area. As I remember, the lira existed quite for a long time. In Germany, we have the Western-Eastern problem, and we had the Deutschmark. So you can argue, at least we did so, with the euro, things did not become worse as they were before already. So there's no, because the difference, the variation is still very high in the euro area as it was before in the national currency areas. But of course, if countries have a different degree of competitiveness, what you have to do is to go for internal devaluation in the euro area. This is what our project for the European Court of Auditors says. How far has internal devaluation instead of external devaluation going on in a country like Greece? Was the Troika right or not? Did they exaggerate or not? So of course it's an issue for the European Court of Auditors because this is taxpayers' money spent into the countries. So my answer is, if you want to continue with the euro area, you have to go for internal adjustments, and you can look it up whether this takes place. This is necessarily the case. Then there was a case, the case of deflation and confidence. What the ECB tries to do now to commit itself on a 1 trillion increase in the balance sheets, and hoping that by expectation effects and other effects, wealth effects, inflation will recover. Estimates say that this might lead to an increase of inflation by 0.8 or something percentage points. This has never been done before, but the main problem is not per se zero inflation. The problem is, as indicated by Draghi and several others, that countries cannot get rid of their debt with such a low degree of inflation. That this is the main problem, the deflating away the debt. This is of course not shared by some of the countries which were called Northern, by Mario Monti yesterday, Finland, Netherlands and Germany, this view that this is a good way to go, but look at the rating agencies, and also colleague Paul de Grauwe and others are arguing in that respect. The agencies like Standard & Poor's put a negative, take it as a negative point if a country's government is too far away from its central bank to go for inflation, because this is very bad for the reduction of public debt. The question was a little bit more in terms of confidence. This is the most the ECB can do, quantitative easing, to commit on an increase of the balance sheets and try to get more confidence. But the problem, as I said, is are the effects of quantitative easing, apart from things like monetary financing of public debt. You know, the thing is still at the European Court. I do not want to dwell on this, but just saying that the effect in technical terms of quantitative easing is ambiguous for Germany. This will probably not lead to an inflationary effect, maybe even deflationary, as I explained to the auditorium, although this is a minority view which we share there. The majority view is different. Let me talk about Schäuble's Black Zero a little bit. Maybe I can change into German right now because translation is available. But I can also speak in let's do it in German. Ich denke.
Well, I think that to talk about investments is easy. You get the supply side economists say, well, it's good for long-term growth. And the demand side, the Keynesian people say, well, what we need is a demand program. But let us remember that we're dealing with people who have problems and relatively low productivity in the EU, and probably would use the capital stock less, if we're to be honest. That's a small counter-argument. But there's also a question you have to look at. Should Germany invest more? If so, how much and how fast, accompanied by more state debt or not? In the Ruhr area, we do need structural investment, but when you compare it with Eastern Germany, well, we're pretty good, and even better compared to Greece. And maybe what you can do is import qualified workers and goods from Greece to the Ruhr area for a period of time. And then maybe they'll go back and help the export if there's a possibility of boosting exports in Greece afterwards. Many countries, the value of investment has gone up in the building sector. That cannot be imitated in other sectors very often. And there's also the fact that we had quite a high level of investment in the past, so there's no room for more investment. And I think at the moment there's twice as much need for investment elsewhere than in Germany. And also you can push that, but what about the airport investment, the Berlin airport? Public-private partnership. You can see what a mess you can get in if you just push these things. There should have been careful planning and monitoring. That's another thing that you should look at. Especially when it came to the initial call for tenders. Net investment very often should not be put through the state budget, because that affects the bottom line at the end of the day. Maybe you should also look at how much debt you accrue in order to invest. Look at what's happened in France. There's been a huge amount of investment, and people are trying to push consumption. It doesn't always work. You can't just have everything ending up in debt. I think this Schäuble's big fat zero, well, maybe he was partly right. You should link that with the amount of debt Europe has and the so-called fiscal pact. You talked about France as well. I think it was your last one. Well, I think that could be a lecture in itself. There's a deindustrialization going on there. A lot of companies are leaving. At the same time, talking about elections, Mrs. Merkel's facing an election too. And there's a lot of politicking going on in the back corridors. And we've seen that with Spain and Portugal when it came to trying to deal with their debts and deficits. And people, at the end of the day, people talk about, well, we must have exceptions, this sort of thing. Look at Draghi. He may well be looking at some sort of political solution to this rather than just an economic solution. So it's a question of tactics and how much time. But there have to be limits, because otherwise Europe anybody loses total credibility. And France itself has problems with competitiveness as well, to boot. So there will have to be certain reforms, and time-wise I don't have time to go into that. But a lot of economists would agree with me in saying that we have a problem with France from that point of view, but that might in turn give problems for Germany, because you know, it's if you like an intermediary country between North and South, and Draghi's Jackson Hole speech, I'd like to mention this here. That talked about the political crisis in France. There was a euro problem, change in government, and but then people talked about exceptions. Don't implement the excessive deficit procedure too much. So then people talked about monetary reforms. But how are you going to guarantee this? Because of the political framework. And people say, well, we'll put it off because it'll be easier politically later on, but that seems to happen all the time.
This was, the solution. What happens if Greece, if the Greek agreement fails? If, for instance, the fifth review program is prolonged, maybe up to 6 months, we have the precautionary credit line, and this does not help Samaras, and we will have Syriza. I saw Syriza, Tsipras in Berlin in the Bundespressekonferenz. He said he would kill at least 70% of the conditions. He does not want to fulfill anymore. What will happen then? This is quite open. Nobody can say what will happen then if still Syriza will come to power in the predated elections. My guess is, if I look at history, even a bank run cannot be excluded. So the situation may become more severe. But it's all the more it is important that you understand in Greece that the success of the program depends on the interplay among actors, especially the conditions which have to be truly fulfilled in order to gain more confidence for foreign investors and to export more, as I said. Lessons from the Greek crisis. Certainly no Brexit. I'm not in favor of any Brexit because you have invested so much and you are in a good way. This is not completed, but you invested so much that these costs are sunk in a sense. They are not relevant. Things have to become more worse in order to have the country exiting. This would be also damaging for Germany, I think. The high degree of capital market integration we have, if you look at the rump euro area, if Germany would exit, for instance, we would lose so many profits from our capital shares in the euro area. This would not be profitable for Germany as well. Sovereign crisis. The lesson is that you have to look for different origins of the crisis. I totally subscribe to that. Ireland, Spain as a group. In Greece it was too high public expenditure driven by too high excess liquidity. You have to be careful. There's so much liquidity already in the pipelines, and you should prevent really a new crisis from emerging. Low interest rates are an incentive to go for more debt. So this is the lesson I would draw from the Greek discussion. But as you noticed, the Greek example incorporated so much of the discussion of the seminar that I very much like to go into the details and not look at the general picture, which can also say genuine economic monetary union. You have the steps and things. Thank you.